You say that your home credit business is continuing to trade well and that credit quality remains good. Given all the economic uncertainty, how have you managed to achieve this?
Well, I agree, the home credit business certainly hasn't been done any favours by economic conditions. But really we've achieved the results through that cautious approach to lending. But in particular we've done two more things in the last year or so. Firstly, we've tightened underwriting on new customers. So there's now a greater proportion of the credit going to existing good quality customers where we've got a bit more capacity to serve them as there's slightly fewer new customers coming into the business, and that's quite deliberate on our part. Secondly, we've also made some changes in the field to the way we're managing arrears and collections on early stage arrears customers, and those are benefiting our impairment performance.
There's clearly a very significant squeeze on household incomes going on at the moment, and yet you say this hasn't affected your customers' ability to repay their loans. So how does that work?
Well, the first point to make is that our customers' incomes have risen year on year. There's about 3% more money coming into the households that we lend to than there was a year ago. But clearly inflation has been an issue for most of our customers. Food prices have been rising now for a few years along with fuel and energy bills. So it's fair to say our customers are seeing some pressure on their disposable incomes, although none of that's new or unexpected, to be honest. The other thing is our customers are used to managing on a tight budget. What tends to happen is it tempers the demand for credit and makes customers and agents a little bit more cautious than they would be in better times. But all our experience of operating in this market for a long time says inflation is much more a dampener on growth than it is a driver of impairments in the business.
Your experience sounds quite different from many other lenders at the current time. Why is that?
Well, that's because we are different, and the key point is our loan book is a much shorter duration than most other lenders, typically less than a year. That means that we can adapt our lending policy to factor in things that we can foresee, such as inflation, into our lending decisions. What tends to cause impairments is actually unexpected events, such as redundancy or significant reductions in working hours. Things that can be foreseen, like inflation, can be accommodated and budgeted for by our customers and our agents.
Despite the difficult environment, you still managed to grow your loan book by 3.7% year on year. What is the appeal of home credit to your customers?
We've got about 1.8 million home credit customers. I'm very proud of the fact that we've got just about the highest customer satisfaction levels in the UK of any financial institution. In fact, our last customer survey said 91% of customers were satisfied with the service they received from us. They like the personal approach from the agent. They also like the weekly discipline that the agent's visit provides. The other thing is our products are very transparent, they're very simple, and in particular there are no hidden fees or charges, so customers always know where they are with us. The amount they owe on a home credit loan can never go up, and they like that comfort.
As well as your customers, you refer to the fact your agents are also showing a degree of caution at the current time. Can you explain why this is?
Well, the important point to bear in mind here is that we pay our agents commission based on what they collect, not on what they lend. So there's no incentive for an agent to make a loan to a customer that they can't afford to repay. This acts as a check on impairments, but it also makes sense for our customers too. Now, although our credit policy is set centrally, each of our loans is underwritten face-to-face in the customer's home by one of our agents. Now, they've been doing the job typically for 7 or 8 years, so they know and understand their customers' circumstances really well. Agents typically live in the communities where the customers are, so that means they have really good local knowledge, for example, about what's going on in the local employment market. Now, we can almost run our lending decisions in real time in the home credit business, and that means we can operate in a way that most other lending businesses can't.
So how do you see the near-term outlook for home credit, and particularly the seasonally important Christmas period?
Well, we are about to enter the peak trading period, and the good news is that the home credit loan book is in very good shape. Now, we do expect customers and agents to remain cautious for the foreseeable future, so it's likely that the rate of growth we've seen so far this year will probably moderate a little bit.